Today I will talk about the different types of bankruptcies, what each one is used for, and why Chapter 7 is the best option.
Hey, do I have something to tell you?
Hello? Hello? Hello?
Blah, 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 yap, yap, yap.
Settle down.
Chapter 7 is not your enemy. I understand being afraid because it stays on your credit report for up to 10 years. There are steps you can take after you file Chapter 7. I want you to stick with this video, and I will tell you what you need to do after you file Chapter 7 where it won't affect your credit score. There are 3 types of bankruptcies: Chapter 13, Chapter 11, and Chapter 7. We're going to talk about Chapter 13 and Chapter 7 today, what they're used for, the reason for filing, why Chapter 7 is the best option for bankruptcy, and what you need to do after you file bankruptcy so you don't ruin your credit score. What is Chapter 13 used for? Chapter 13 is a type of bankruptcy often called a wage earner's plan. It's designed for individuals who have an ordinary income and want to reorganize their debts while keeping their property. Instead of eliminating assets to pay off debts, Chapter 13 allows people to repay back debt over a period of 3 to 5 years. Some benefits of Chapter 13 include stopping foreclosure. You can save your home from foreclosure by catching up on missed mortgage payments over time. Rescheduling debts. You can reschedule secured debts, extending them over the Chapter 13 plan period, which can lower your monthly payments. Protecting cosigners. If someone has co-signed a loan for you, Chapter 13 can protect them from creditors seeking repayment. Discharge of debts. Certain debts that might not be dischargeable in other types of bankruptcy can be discharged in Chapter 13. The goal is to help you reorganize your finances, repay your debts more comfortably, and eventually achieve a fresh start. If you're considering this option, it might be helpful to consult with a bankruptcy attorney who can offer direction adapted to your circumstances. The downside is, if you offer a monthly amount for repayment that's too low, the judge may reject the offer. The stress of keeping up with your current debt as well. Some people get second jobs to satisfy the extra financial obligation. What is Chapter 7 used for? Chapter 7 bankruptcy, often referred to as liquidation bankruptcy, is designed to help individuals get a new start by discharging most, if not all, their debts. Liquidation of assets. A delegate is assigned to oversee the process and may sell some of your assets to pay off creditors. Certain essential assets may be exempt, depending on state laws. Discharge of debts. Once the process is complete, many types of unsecured debts, like credit card balances, medical bills, and personal loans, are discharged, meaning you are no longer legally required to pay them. Quick process. Chapter 7 is typically faster than Chapter 13, often taking about 3 to 6 months from start to finish. Income requirement. Not everyone qualifies for Chapter 7. You must pass a means test, which compares your income to the median income in your state. If your income is too high, you might need to file for Chapter 13 instead. The key difference between Chapter 7 and Chapter 13 is that Chapter 7 involves liquidating assets to pay off debts, while Chapter 13 involves creating a repayment plan. Chapter 7 is generally suitable for those with limited income and few assets. If you're considering filing for bankruptcy, it's a good idea to consult with a bankruptcy attorney who can help you understand your options and guide you through the process. Why people choose Chapter 13 over Chapter 7? Debt repayment plan. Chapter 13 allows individuals to create a repayment plan to pay off their debts over a period of 3 to 5 years. This can be beneficial for those who have a steady income and want to keep their assets. Asset protection. Unlike Chapter 7, which may require the liquidation of non-exempt assets to pay off creditors, Chapter 13 helps individuals protect their assets while they repay their debts. Eligibility. Some people may not qualify for Chapter 7 due to their income level. Chapter 13 provides an alternative for those who have higher incomes but still need relief from their debts. Why is filing Chapter 13 worse than Chapter 7? Longer process. Chapter 13 bankruptcy involves a repayment plan that lasts 3 to 5 years, which means individuals are under court supervision for a longer period. Higher costs. The costs associated with Chapter 13 can be higher due to the extended duration and the need for ongoing legal and administrative fees. Credit impact. Chapter 13 remains on your credit report for 7 years, which can affect your ability to obtain credit for a longer time compared to Chapter 7, which remains on your credit report for 10 years, but may have a severe impact over time. Why don't finance companies like to see Chapter 13 on your credit report? Extended repayment plan. Chapter 13 involves a repayment plan that lasts 3 to 5 years, which indicates to lenders that the individual has been under financial distress for an extended period. Higher risk. Since Chapter 13 requires individuals to repay a portion of their debts, it suggests that the person may still be struggling with financial stability, giving them a higher risk for future credit. Credit impact. Chapter 13 remains on a credit report for 7 years, which can negatively affect an individual's credit score and their ability to obtain new credit during that time. Anybody can file Chapter 13, but you must qualify to file Chapter 7 for a judge to approve it. Qualifying to file for Chapter 7. Debt-to-income ratio. You need to determine your debt-to-income ratio by dividing your monthly expenses by your monthly income. If this ratio is 30% or more, it indicates difficulty in paying your debts with your current income. Problem debts. If your debts total more than 50% of your annual income, you can file for Chapter 7 bankruptcy to discharge them. Means test. To pass the Chapter 7 means test, your income must be below your state's median income level, or you must not be able to pay 25% of your general unsecured debt over 60 months. In other words, you can't file Chapter 7 for owing $10,000 in debt and make $60,000 a year. You can talk to a lawyer to get more information on qualifying status for your state. Heads up, you must pay all costs up front. Lawyer and filing fees. Make sure you're filing for the right reason. Note to you, if you want to file Chapter 7 because you are tired of paying bills, this is the wrong reason. I suggest you stop spending money, cut up your credit cards, and start going to someone else's house for dinner. How to file. Here's the first step to obtaining a higher credit score after you file Chapter 7. Don't put everything on your Chapter 7. Don't include the car payment unless the car is garbage. If you have multiple credit cards, don't include the card with the highest credit limit. This way you have a head start on rebuilding your credit during the 10 years Chapter 7 is on your credit report without having to start over. The final step is hiring a lawyer to help you clear your credit report. If the bad debt is satisfied through Chapter 7, it does not need to be on your credit report because you do not owe this debt anymore. Every time a derogatory remark is removed from your credit report, your credit score will go up. In the meantime, you are still raising your credit score by paying on the current debt that was not included in Chapter 7. These are the steps I took when I filed Chapter 7 and when it was time to buy my home. The mortgage lender for my pre-approval was shocked at my credit score. It was almost 800. She mentioned she had never seen a credit score so high with a bankruptcy. If you want to know how to clear your credit and achieve a higher credit score with bankruptcy on your credit report, watch the 2 videos above. If you want to get more information on articles that will save you time and money, you don't want to miss out on future videos. Click the subscribe button, like the video, and leave a comment.
And always, always, thank you for watching.